Imagine owning a piece of company which is not just reshaping how we travel, but also how goods move across the globe. A stock so undervalued that it could turn into a ride of your life. So stick around, because in the next few minutes we'll be diving into why this massive tech giant might be the ultimate growth opportunity what you've been looking for. So without further ado, let's get right into it. So today we are going to talk about one of the best growth stocks for the year 2025, which is actually proving to be an innovation in the urban mobility. So stay tuned for this deep dive analysis for this exciting tech company, which is none other than Uber. Yes. So here we are, guys, on Yahoo Finance for Uber Technologies, and at the time of recording this video, Uber is trading at $60 with a P ratio of just 29, which seems kind of cheap when compared to its peers, and with a current market cap of $127 billion. So now let's dive into a deep analysis of this tech giant Uber Technologies. And like always, we'll first cover the bearish points and the bearish case scenario. So first thing first is the moat attack. That means competition, and this is not just limited to Uber. All the other companies which are in the autonomous driving sector will have this issue. And what could be the biggest threat to a company? None other than the biggest tech giant in the industry, which is Tesla. So Elon Musk unveils Tesla's Cybercab plans to bring autonomous driving tech to the other models in 2025. So this could be one of the biggest threats for Uber, but we will get on to that why this could be actually helping Uber on the other hand as well. So now the other important point is insider selling. Now this is something which I always check if the insiders are buying or selling. Now there could be multiple reasons why the insiders could be selling their shares, and here we can see that the CFO has been selling quite a lot of shares in the past few months and in the past year, and this is one of the bearish points which I wanted to share with you guys, because insider selling is not that good of a thing, especially when the stock price is trading at such low levels. And you can see that he sold at $60 strike price. Actually, at these prices investors are buying, but he's selling. But now again, like I said, guys, there could be multiple reasons for the insiders to sell their shares. I actually would like to see that insiders would be buying at these cheap prices, but unfortunately I haven't seen that. So moving on, more competition. So after Tesla, we have seen more competition for Uber. Beginning in early 2025, Waymo and Uber will bring autonomous ride hailing to Austin and Atlanta only on the Uber app. Waymo, which has already powered fully autonomous trips for tens of thousands of riders in Phoenix. So Waymo is seen to be a competitor for Uber for autonomous driving. But again, guys, these are two different segments, which I will explain further in this video. These are two independent segments in my opinion: autonomous driving and driving with real people who own their own cars. This is what I mentioned, that competition with Tesla could actually benefit Uber because of their Uber app. We'll get onto that in a moment. So moving on, average rideshare price per mile in LA. So we can see that the average rideshare price per mile in LA is really expensive in case of Uber, and cheapest for Waymo. Here is when the competition is picking up. Yeah, now Uber was also really cheap when it entered the market, so Waymo is trying to do that as well. So there is a big chance that Waymo will be unprofitable for the coming years, and this is the strategy which Uber also acquired to acquire a bigger chunk of the market, and Waymo is doing that. So this is actually a bearish point, but like I said, some bearish points will further prove us to be actually bullish in case of Uber. But anyways, so this is what we need to know, that yes, Uber is expensive when compared to Waymo, even Lyft. Now let's jump on to the bullish case scenario. So first thing first, concerns seem overblown. All these concerns which I mentioned actually seems overblown. Uber remains the dominant ride-hailing and food delivery service with over 150 million users, providing robotaxi operators access to a huge customer base. And this is what I meant, that this Tesla competition and Waymo competition is actually good for Uber. As soon as Tesla jump into the robocab industry, they would need a huge customer base, and they would need Uber app, which is already developed and has a huge customer base, and this is what Waymo is doing. So the more competition Uber has, eventually these companies would need Uber app for its customer base, which Uber has already developed over the past years, until unless they make their own customer base, which will require some time. But until then, Uber does have a strong moat. Okay, so Uber's entrenched position in many cities makes it an attractive partner for robotaxis, and this is what I meant, that competition with Tesla is actually not a competition, but actually helpful for Uber in this case, in my opinion. So Aggregation autonomous and human drivers on its platform offers a powerful combination that will benefit users by boosting reliability. So moreover, robotaxis are now too expensive to operate at scale, and it could take years for them to make a big dent in the market. And this is what I meant, that it might take some time for these robotaxis to acquire the bigger chunk of this market. So there is, like I said, these are two different segments. In the beginning, these will be segregated into two different segments. So robotaxis and Uber taxis, which are driven by real humans, because the services for both of these and scaling is actually different. Okay, we'll get onto that again. Now, best network. This is what I meant, that many of these autonomous companies will need Uber for its best network. So Uber is the market leader in the US ride sharing with 76% share. According to Bloomberg, it also ranks second in the restaurant food delivery space with 24% market share. The scale affords the company a key competitive advantage in that it generates significant data that lets Uber predict demand route drivers very efficiently. Moving on, efficient platform already exists, and this is a part which I'm repeating again and again, but this is actually quite important to know for all the investors out there, that this is the real mode for Uber. Additionally, Uber has another important advantage in its ability to offer ride sharing and food delivery services through a single mobile app that support cost efficient customer acquisition, because Uber can sell users on both sides of its platform. For instance, 31% of first delivery trips come from mobility users and 22% of its first mobility trips come from delivery users. So just imagine, guys, if Tesla goes into the market, Waymo goes into the market. Waymo, like we already know, is following the more efficient way. That means partnering with Uber because of its mobile app. Tesla might do the same, because Tesla would need more resources to design its app, and then they also need the customer user database, which Uber already has. So why not to partnership up with Uber and use its customer database instead of going all this way releasing their own apps? This is what an efficient marketing strategy would be for all these autonomous vehicles, to partnership up with Uber, because Uber, like we already know, is like a verb now. Uber me, Uber me, Uber me. So the usage of Uber is skyrocketing. So just imagine, as a customer, would you want to have multiple apps on your mobile phones for your delivery services or mobility services? I don't think so. So in the coming 2 to 3 years, I do believe that Uber doesn't have a threat to its mode. Yes, in the future, who knows, Tesla or some other company or some other competitor comes up with their own mobile apps, comes up with their own user database and apps, and then there might be a competition, a much bigger competition for Uber. But for now, I do believe that this is an undervalued tech stock. Now, continued growth. Uber delivered a good financial performance in the third quarter despite missing gross booking estimates. Total revenue increased 22% to $11 billion on strong sales growth in the mobility segment, 29%, and the delivery segment also grew by 19%. And this is amazing, guys. This is huge. More partnerships, like I discussed, that there are more partnerships coming for Uber. So every other company is actually following a much more efficient way, which is to partner up with a company who has an existing user database. So Uber and WeRide launched autonomous mobility service in Abu Dhabi. Uber and Avride announced autonomous delivery and a mobility partnership. Wave and Uber partnered to accelerate the future of automated driving. So as we see, there are these current partnerships, but more partnerships might be coming into Uber's pocket. Now, these are some more factors to consider from my point of view to make an informed investment decision for 2025. First thing, I personally don't think it's going to be all robotaxi anytime soon, like I mentioned before. And we think that when the technology comes in, there will be a transition. And this transition might take some time, months, even years. We will have essentially hybrid networks for which Uber already have the platform resources, like I mentioned. They also want their cars running the maximum amount possible to recover the initial cost. And this is what I mean by the autonomous vehicles. For this reason, it makes no sense to deploy enough cars for peak demand if they are going to be just sitting around the rest of the day or weeks. Yeah. So this is an important factor to consider when we are actually calculating the value of an autonomous vehicle versus an Uber vehicle. Dealing with drivers and crime rates could potentially be a threat for the human driver cars or Uber. So this is one of the bearish points for Uber. So the first 2 points are the bullish points in my opinion, which goes in favor for Uber. Now Waymo, like Uber, in the initial years has to keep the prices low to acquire market share, but it faces huge competition with other AVs. So with Uber, we had only Lyft. Yeah, but with Waymo, we have much more other companies who are going into the autonomous driving segment. Forget others, but Tesla, the biggest tech giant. So for the autonomous sector, they have more competition. But for Uber, there is, if we divide this into 2 segments, then Uber doesn't really have this kind of a competition. Okay, and this brings us to the 5th point. AV and human driven cars could become a separate market, like I mentioned, until one of the companies take major market share and expand exponentially. This is what I've been saying since the beginning of this video. Now AVs would need subsidization to gain market share and price out competition. They also need the data to improve their model, so cheaper than just running the cars for R&D alone. Hardware is very expensive, this is really important, and let alone the cost to operate, maintain, calibrate, repair and update. And this is what we need to know when we are talking about Uber services and autonomous services. So the maintenance costs for the autonomous vehicle might be much more expensive as compared to the Uber vehicle. Of course, we can say that per ride costs for a customer, Uber might be expensive because tips are included, and like we already saw, the ride per share is expensive for Uber compared to Waymo. But we also have to understand how much money or the operating expenses Waymo needs. So we can see that the hardware for that vehicle is quite expensive, but on the other hand for Uber, it's someone's own car. So here we are, changing the cost, operating costs. So how the fundamentals of these businesses will come into play for Uber, we already know, but for the AV segment, we still don't know how these companies will actually be able to survive with all these costs, with charging less and still have to acquire the market share. So last but not the least, risk to reward is favorable in my opinion in at least next 3 to 5 years, until unless there is some bigger threat for Uber, for its mode, some other tech giant like Tesla bringing up their own app, and they can somehow prove us users to be more efficient than the Uber platform. Okay guys, so now let's jump on to the valuation and my personal strategy with Uber. So I will take free cash flow into the consideration as a metric for the next 5 years and a 14% metric growth. Why I'm taking 14% metric growth? Because we can see in the trailing 12-month period, we have an average, if we take the average, around 12 to 14%. So this is what I will take into consideration because Uber is still new to profitability. Yeah, and this is what I would not like to see, that they are diluting us with 5% annual growth rate. So this, I would assume that it should become less, especially when they are cash flow positive now and they are not giving any dividends. And the price ratio, I wouldn't take 27, but I will take 25 into consideration to be more conservative, and the discount rate is 10% because this is what I would like to see, at least to beat the market. Otherwise, why would I need to invest into individual shares, and I could just be hassle free and invest into broad market index. So what Uber has to do to achieve these evaluations? So currently it's generating a cash flow of $5.9 billion. In the next 5 years, if you believe that Uber could double its free cash flow and reach $11.4 billion, then these assumptions would be possible. I do believe that these are conservative assumptions. So with these assumptions, we have an annual compound annual growth rate for our investment at 10.62%. We are barely beating the market with a fair value of $66. So yeah, we are currently, at the time of recording this video, it's at $60, and future stock price $65. So I don't know why it shows only 2% above the fair value. At the time of recording this video, like I showed you guys, it's trading at $60, so it should be 10% here, but anyways, maybe a glitch. So with taking this into consideration, we can see that future stock price has an upside potential of 65%. Now let's tweak some numbers. So I do believe that Uber would be able to grow its free cash flow at a much bigger rate, but I will take 18%. And I do believe that the price ratio will expand because Uber is still in the growing phase. So 26, or let's say the average 27. And this tells us that the future stock price could give us 100% profit, and compound annual growth rate of our investment would be at 16%. And this is the reason why I am investing into Uber. So we started buying Uber at $60 and $59 or so as well. And when I say our, I mean me and my Patreon members. So our average price is at $60, and this is what we are planning to do. So we will keep on averaging it up because the price will rise in 2025. I'm sure of that. So our target would be around $120 or something like that. And then we will see how the market will behave for Uber. But this is my strategy. So we have bought Uber, yes, and it has been added to my personal portfolio, and our Patreon members have also added, and we are investing it on monthly basis until unless we are below the fair value. We are buying it below $70. So this is my strategy, and that's it for Uber Technologies, guys. The tech giant, the next tech giant. So that's it, guys. That's all for today, and I hope you guys liked this video. And if you did, then don't forget to hit that subscribe button as well for more of such videos, and to see some more videos on smart investment opportunities like this one. And I have made a detailed video on 2 undervalued stocks, which you can have a look here, and you guys will see me there. Until then, stay safe, stay healthy, and ciao.